First a word from your end after seeing the way the August series had almost 9% fall in the Sensex and the Nifty. How are you entering into the September series?
Yeah, hi, good morning. So what we are seeing is, if you look at global markets or global economies, especially if you look at US or Japan or Europe, they are improving. If you look at emerging nations like Turkey, Brazil, Indonesia are raising rates. So competition is increasing for capital, and that will pose its own challenges for India, we feel so. If you look at the next month, you have a big event on around 18th of September with the Fed deciding on the taper amount. That is keeping the volatility high. In fact, volatility is back in markets, and it is here for some more couple of quarters to stay. Plus, our own growth is slowing down. So all these put together, we think markets will be quite choppy in the month of September, and you can have a range on the lower side as low as around 5,000, 5,050, and on the upper side around 5,600, 5,650 kind of levels.
Okay, Amit, what's the sense you are getting about the metal stocks? Is there anyone in which you have a strategy?
Yeah, so for example, if you look at Europe, as I was mentioning, that is an economy which is improving. So for example, Tata Steel and Tata Motors, both we like from that sense. So for Tata Steel, one can go for a ratio trade, which is one can buy 270 strike calls in September series and sell 2 quantity of 300 strike calls. So there is a net investment of 4 rupees in this strategy. So you will make profit if Tata Steel remains any value above 274 and 326, which we feel should be a reasonable level to play for.
Actually, Amit, how will the September series itself pan out? Do you think, are we starting heavy, or do you think there will be short pressures because of short rolls? On Nifty and Bank Nifty, how do you see at least the first week progressing?
Yeah, so if you see, in fact, we are experiencing record turnovers on markets. So we think the series seems to be quite heavy in that sense. So we need to see how it will plan. But what we feel is, at least for the next few days, you may not go anywhere. You may have a sideways kind of movement, which is like one day you may move 1.5% up, and next few days you will kind of give up those kind of gains that you have. So at least for the first week till around 10th of September, we think market should be slightly stable and range bound kind of a thing. But action will start as you move towards the 18th of September event.
Okay. Amit, are there significant shorts still built up in the banking space? And if you had to give us one strategy on any individual banking stock in the Nifty, what would it be?
Yeah, we feel banking would definitely underperform markets going forward, at least in the next couple of months kind of a scenario. Predominantly because what RBI did on July 16th has shaken a lot of the banks in terms of it has choked some of the volatility, some of the liquidity that they were having. So we think stocks should underperform. In fact, for banks like ICICI, we have a trade. One can buy 900 strike calls and sell 2 quantity 920 strike calls. So you are getting 4 rupees cash inflow, which is 1,000 rupees of cash inflow on a margin deployed of 40,000. So 2.5% returns if ICICI remains any value less than 945 rupees, which is like close to 15%, 20% from current levels.
Okay, and Amit, ONGC, another stock with such a huge fall in the last, say, 12 to 16 weeks. How would you approach that one?
Yeah, so similarly for ONGC, we think these stocks should underperform given the way there are concerns about the fiscal and other budgetary issues with respect to Government of India. So there will be very little that you can do in these kind of stocks. So we think the stocks will underperform. So one can go and sell 310 calls of ONGC because of higher implied vols in the market. Stocks like ONGC are also trading at higher implied vols, and you are getting around 1.3 rupees as option values. So you can sell them. You will make losses only when ONGC goes above 310 rupees, which is like close to 20% from current levels.
Amit, you have a strategy for the morning on Tata Motors as well. Just run us through that.
Yeah, so for example, as I was mentioning, we think that if you look at dollar index, while dollar has appreciated against most of the currencies, euro has actually appreciated against dollar. That is predominantly because of the signs of improvement in that region. So we think companies which are focused on that in that region should benefit, similar to Tata Motors. So in this particular series, one can go and sell 260 puts of Tata Motors. You are getting around 1.5–2 rupees kind of inflow, and if Tata Motors remains any value about 260, which is close to around 16% from current levels, you will make approximately 1,500 rupees on a margin deployed of 40,000 rupees.
Okay, Amit, and I did want to ask you about Reliance. We have seen some unusual activity in Reliance as well, and that big fall went along with the markets. How do you trade it today?
Yeah, so again for Reliance, we think the stock should remain above 800 in the September series. So one can go and sell puts of 760 or 780. So 760 puts are like around 7 rupees trading in market. So you can go and sell 760 puts, which are reasonably safe to trade, and you will make around 1500 rupees again over here on a margin deployed of around 40,000, so which is like around 4% returns if Reliance remains any value above 760, which is like close to 12% from current.
At what point on the index would you advise a fresh short position on the Nifty? And if you're advising a short position, where would you keep your stop loss now?
Yeah, around 55.50 and up. Anything above than that, we think that one can go and do shorts, because if you are looking at volatility, normally when there is higher volatility, things have to go down, and that's where you will see stability coming down. So at 55.50 or 5600, we'll again look at the Nifty Wicks. If it is like coming down to 16-17, maybe we'll not take a short, but if it remains at around 25 and above, we will definitely like to go and short, because then the markets will definitely come down to around 5300 odd kind of numbers definitely.
Any levels, Amit, on Bank Nifty that you will watch very closely?
See, Bank Nifty has fallen and broken all the important interesting levels that you have. So putting numbers would be difficult, but if you are looking at going short on banks, any value closer to 10,000 would be a number that you would like to look at for going short on.
Okay.
Because banks will have a bad quarter and results. Yeah.
Just some of these heavyweight names, how would you approach them now, Amit? HDFC, HDFC Bank and ITC, all these three stocks in the series gone by saw some big cuts.
Yeah, so actually what we have been seeing is these were the crowded stocks. So everyone wanted to be in HDFC or ITC, and that's why we are seeing some kind of unwinding in those particular stocks. If you are looking at from a investment perspective, I think still HDFC and ITC can give you some kind of a positive thing. HDFC Bank I would like to avoid, just because want to avoid banks at this point of time. But you won't see a meaningful rally in these stocks in the next couple of months, because these are the places where people have booked reasonable amount of profits, and they are sitting on some profits, and there would be unwinding if there is in these stocks only.
Okay, Amit, thanks so much for joining us and giving us that view. So